Microsoft just announced a 10% dividend raise. So this is fantastic news for any shareholders of Microsoft. I'm going to now receive more passive income than before, all for doing nothing, and this is why I pick stocks that regularly increase their dividend income. So going into today on Friday, my TFSA is down 3% or 485.36, and all time we're down about 6% or about a little over $1,000. Now, this is actually a good thing. I'm actually happy about this because there's so many stocks in different companies that are trading at incredible valuations. And I'll be going through the portfolio update this week and just seeing what the market has in store and any other related news. All right, so if you want to follow along with the journey, my buys and sells in this very interesting market that keeps falling all the time, just like the video, subscribe, and now I'll roll the intro. So in the portfolio, we see that Apple's kind of falling a little bit with the rest of the market sell-off. Still in the green in this position. They're actually going to be the sponsor of the Super Bowl halftime show, taking it from Pepsi. So a little bit of a big news. I know Pepsi's been doing it for a long time, so it'll be interesting to see what, if anything, this does for Apple. But it has a lot of views. It's probably the most viewed sports event, if I'm not mistaken. If I'm not, definitely let me know in the comments below if any other sport is more popular. Probably soccer, I imagine, or football if you're in Europe. And then AQN is down just like everything else. The Federal Reserve just continues increasing interest rates, and they don't see inflation cooling off till 2025. So that's why all the markets have been selling off. That's the Canadian market, the US market, and until that actually happens, this market sell-off could last several years. But it's a great buying opportunity for people, especially if you're still accumulating wealth, you're a bit younger, you're 10, 20, 30 years out from retirement. You have a great opportunity to craft the portfolio you want, because in a bull market, you don't really have that freedom. You have to basically acquire stocks of companies that are trading at good values and maybe not necessarily high quality, just because everything is inflated. But I think right now you can basically pick and choose almost anything, assuming the quality is there. You should do very well. And we see that Aritzia and ATD are holding pretty well, so these are doing pretty solid. And with Aritzia, the retail sales in Canada have slowed, so that's definitely a concern. But again, they are a luxury retailer, so they are not, I don't believe they'll be as affected, but we'll see their earnings report. It's going to be in October, so definitely interested in seeing how that turns out. And for Brookfield, I actually acquired 2 more shares going up to 16, just because they're going to be spinning off their asset management business and giving 1 share of the new spinoff for each 4 shares you have of BAM. So I wanted to just have a share count that divides by 4. And if I'm going to add to this position before the spinoff, I definitely have to make sure that my share count divides by 4 for that reason, just so I get all the shares and we don't lose any value there, because I'm not sure how WealthSimple is going to handle that. And Scotiabank, I've just been buying this fractionally a little bit. So we went up, just bought a bit more fractionally. This is now offering about a 6% starting yield, which is insane, because I think Scotiabank usually gives like a 5, 5.5. So historically, this is a very, very high yield. Pretty good time to get into the banks, and I'll definitely be looking to acquire more. Costco just presented their earnings, and they actually had a very good beat. They beat on the top line and the bottom line revenues. So, but it's selling off just like everything else in the market. Everybody's worried. And I listened to the earnings call. The key takeaways really were that the membership renewals were higher. They were over 92%. I think it was like a little over 91% before. So good increase there. And they attributed some of that to their 50% auto renewal, so their members can just auto renew without even thinking about it or actively doing it. So that's definitely helping them, and that's a good sign for the business going forward. They don't have any plans on raising the membership fees at this time, but they definitely will in the future. So, they said it's a matter of when and not if. So I guess Wall Street was expecting that they were going to do it, but they're not doing it right now. So that's fine. We'll wait for them to do that. They usually do it every 5 years and 7 months on average, and that amount of time hasn't passed. That should be in like January of 2023, although the CEO didn't say it would happen at that time, but we'll wait and see what happens there. And then with ENS, I just acquired one more share going to 71 just because Enbridge fell just like everything else. And Ethereum is, crypto's dead basically. Nobody wants crypto now. Nobody wants any risky asset whatsoever. Google's entered a very, very good value territory here under $100 a share. I really think this should be much higher. So if you're looking to start a position in big tech, I think Google's pretty undervalued, pretty cheap. Amazon looks pretty decent, and Microsoft and Apple look, pretty fairly valued to maybe even undervalued now, just depending on your assumptions. So very interesting there. And Microsoft, that dividend raise is really nice, especially in this time. I think this is the lowest it's been in a very, very long time. So very interesting time to look at this one. It may fall a little bit more, but I'm definitely interested in adding here. Adding to Costco as well. I really, really do hope it falls. I hope all these stocks fall immensely, just so I can continue adding and getting to our goals of making a passive income to the point that it's enough to pay off some bills. Maybe I can switch to part-time at work and then maybe fully retire at some point. But I'm gonna have to put in the work and just put in the money, and the portfolio will do the rest of the heavy lifting for me. So Smart Center is actually down. I acquired another share of this going to 32 shares. So this is offering about a 7% yield right now, which is great. So I'm definitely going to be looking to add, a couple shares here and there as the yield stays really, really high, because there's nothing wrong with the business. It's just a normal market-wide sell-off. So REITs look very attractive. There's a few others like Granite, Dream Industrial I'm looking into. Because those have been getting beat up. Smart Centers has actually held up a lot better than most of the REITs in the sector. So I'm very impressed with the performance because it hasn't, gone down nearly as much as everything else, and still providing that monthly income. Really solid. And for TELUS, I bought one more share going from 27 to 28. So this one dipped below my cost basis. So definitely a good time to add a little bit. I mean, if it falls significantly, definitely going to be interested in adding a much larger position. And just tracking the dividends earned, I've earned $774.95 since starting the portfolio. So this is all money that's been earned, passively. I didn't have to clock in at work. I didn't have to do anything for it. Just holding assets and ownership of these companies, and I'm getting my share of the payout as an owner. Annually, the portfolio is generating $881.60 per year versus last week of $874.75. And monthly, we're earning a little bit more, so $73.47 versus $72.87. So about 50-cent increase every month, so not too bad. We didn't really buy high-yield stocks here, so not bad at all. Weekly, we're generating $16.95 a week. And then on the daily, we're generating an extra 2 cents a day. So instead of $2.40, now it's $2.42. So inching closer to that goal of hitting $3 a day in passive income. And the months to earn $100 has decreased from 1.37 to 1.36 months. So we're just going to continue dollar cost averaging into the market. And, I don't care what the prices are. If they go up, they go down, I don't care. I mean, I prefer that they go down at this point because my portfolio is very small. I'm at the start of my, I'm in the accumulation phase of my investing journey, of my dividend portfolio. So the cheaper these stocks go, the better my returns will be. I mean, how many people look back at the S&P 500 chart and see, if I would have bought at the very bottom here and kept it, till, now, my return would have been incredible. So, in hindsight, we always wish that we buy when the market goes down, but In practice, though, it doesn't really work that way, because most people sell out of the market out of fear because they're worried about their assets declining and going down. I mean, it's essentially the same as like selling your house just because the price is low, and you keep getting offered less and less for it. Assuming that you're not in any financial duress to sell that home, you don't have to. Just like your ownership in your ETFs and in your solid companies. Why are you selling your company for a lower price? As long as you believe in the company and there's nothing wrong with it, don't let the market influence you or peer pressure you into doing something stupid that you're going to regret for the rest of your financial life. All right, so if you want to get started with investing, definitely feel free to use my link for WealthSimple in the description below, so you can get up to $3,000 worth of value for signing up using that link and making a deposit and making some trades. So let me know in the comments down below, what are you buying in this market? Because everything seems to be on sale. Maybe there's something more under the radar that we haven't heard of, that I haven't heard of at least. So yeah, definitely shout off in the comments, and have a good day, and take advantage of the sell-off, everybody. Nothing to fear in the market. The only thing to fear is fear itself. And if you want to make a giant return, you got to be buying when everybody's selling. All right, have a good one.